next thing you know, I get a phone call, say, "Hey, you still serious about that PayGo GL?" And I said, "Yeah, well, yeah, if we could offer it, I think it'd be kind of cool." And so it's kind of morphed into this program. So this program is it's designed for the contracting classes, contractors and artisans. Workers' comp codes, it covers about 72 currently, but GL codes, it's 48. So we matched the GL code to the comp codes. So, so a payroll company does not have to make adjustments to its reporting, which is nice because if we can get it, it it translates over to the correct GL code. Um, so it's the same scenario as with the workers' comp. They don't have to estimate either payroll or sales. And for contracting, that's really tough because what if they they estimate a sales and they got a really big project, they put that down, well, they're going to be paying for it, you know?
Welcome to Insurance Shoptalk. This is the podcast where the world of commercial insurance gets a little closer to home. I'm your host, Eric Stein, and in every episode, we're taking a deep dive into the insurance industry, from the latest news and trends to in-depth interviews with InsurTech experts, carriers, and agency newsmakers. We're covering it all. So sit back, tune in, and let's start the conversation. All right, Jim, thank you for coming on. I really appreciate it. We have Jim. Jim, is it Urseth or Usreth?
I don't know. Urseth.
Urseth? Oh, I missed both of them. Yeah, I just
Yeah,
called you Jim. So, uh,
yeah.
but no, hey, thank you so much for coming on. We have Jim on with Reliable Premium Management to go into some of his pay-as-you-go programs for workers' comp, and also a brand new program, which I'm excited about because I've worked with Jim for a while on the pay-as-you-go comp side. But I'm excited about this new general liability pay-as-you-go program with Markel. And he's going to go through that too. But Jim, again, I really appreciate you coming on.
Yeah, my pleasure. Thanks for having me.
And so why don't we just jump right in? So as far as reliable premium, can you kind of share your origin story briefly and how you came up with a concept to, make this easy for agents?
Well, basically, as an agent myself at one point in time, I kind of got my baptism right into pay as you go. I was when I got my insurance license in '94. I was immediately used as the person to go out and pull people out of PEOs. So, and this is when pay as you go comp wasn't necessarily embraced by a lot of insurance companies. And I just see it as a no brainer because if you can make it easy for the customer, and you can embed it into processes they're already doing, which are already doing payroll. It's a great way to build stickiness with your account, and it's a great way to add value to your account. And and cash flow is important. When customers are putting down payments down, and then they're getting an audit, and the audit is going to affect their down payment again, and it gets to be a lot. I've found that agents will lose. That's kind of when they lose clients, either to a big payroll company or to PEOs or to another agent because they're upset about an audit. And then the resulting, they got a big refund that the carrier sat on all year. They didn't collect interest, or they have to pay a big, audit balance. And that's just, something that agents should fear as well, because, you don't want your client getting upset about money that's owed that they didn't feel, nobody feels they should owe an audit.
Right.
So, but they love it when they get the return. Not so much the agent with the chargeback, but anyway, uh, so as I started to migrate out of the retail side of business, I opened up RPM to other agents because my book of business at the agency I was at that time started to get preyed upon by other agents. And they're like, well, we want to keep the pay-as-you-go function going. And so I said, well, sure. So that's how RPM got its origins about 13, 14 years ago, was something that I was doing in-house as a separate business, but my retail book was with an agency, and just open it up to let other agents start using it. And we've grown from there.
Yeah, I noticed too. I mean, you've got a ton of carriers now where I remember 15 years ago, even, or maybe even 10 years ago, hardly any carriers were even
Yeah,
accepting pay-as-you-go in a
right.
format. And I noticed you have a ton of work comp programs.
Yeah, yeah. Well, that's agent driven. So one of the things when I was an agent, I had a very large book of business. So I was, I've been in it for a while, and I was kind of a comp guy for a lot of the payroll companies. And so you can push when you have a book of business, you're more influential with a carrier than if you don't. So I could call the carrier and say, "Hey, I'm Jim Urseth with Reliable Premium Management. I'd like to pay as you go with you." They're going to go, "We'll call you back." But when you're an agent, you say, "Well, I got a $2 million book and I got these accounts. I'm going to have to move them unless you can do pay as you go." That gets the agents that gets the carrier's attention. So the first 8 or 10 carriers that we worked with when RPM became RPM and not just a function of my insurance business was carriers that I forced into the conversation. Um, since then, and whenever we talk to agents, they look at our website. Insurance companies will bring an agent to our website. They'll say, "Oh, do you work with so and so?" And I've had that conversation. My staff knows that now too. Say, "Look, you're the one that's got the club as the agent. You're the one that can force that conversation." So I would love to take credit for the 90 plus carriers that we've added since then. But really, it is coaching the agent. Hey, you've got a reason to want to work with this company, this insurance company. You set up the call. We'll talk to them about how to do the pay as you go. And so that's kind of how that's worked. But yeah, we have no, we have more companies just on our site. Some we just choose not to advertise. We do them on a one-off basis, but we have over 100 companies that we handle premiums
Wow,
for.
man, that's really
Yeah,
changed in this short amount of time. Congrats on helping the industry like that, because
oh,
now it's becoming where it used to be where the agent would bring up that conversation. Now the
yeah,
client's beginning to say, "Hey, do you have pay as you go?" And then
yeah,
of course you've got your ADPs out there and paychecks that are already blending it, with the payroll system already. So that causes the client to ask too.
yeah,
Now
yeah,
you're
absolutely.
putting the agent in an advantage where you can work with their appointed carriers, automatically, you know?
Yeah, no, absolutely. Uh, we try to position ourselves as a supporting role for the agent. And agents that start to use this more and more use this more and more. Because they realize that for them to have the constant contact with their client like we do, they'd have to hire somebody. So we're kind of a free CSR in a way for them. So
No, I can vouch for that. Just when I've used you guys, for some of our work comp programs, the I've literally, put my CSR that was handling a lot of that client communication is now able to do other functions,
yeah, yeah,
and where she was spending, we had a decent amount of the pay as you go, probably, I don't know, 10, 15 hours a week on the projects,
yeah,
you
yeah,
turn that
yeah,
into about an hour for us. So that was
yeah.
phenomenal.
Yeah, and it's important to have contact with the clients, but it's not always practical that it's like, why is my agent calling me again? Because I just talked to him a week and a half ago. Whereas we're saying, "Hey, on behalf of your agent, here's your invoice for the week, and if you have any questions, and it's and then when they do have questions, sometimes people will start to mistake us for the agency, and they'll call us for a certificate. I had one or last week ask us, ask
Right.
their contact for, "I need an endorsement on my policy," and so okay, well, this was a new employee of ours as well, and so she's like, "Jim, I had a client ask me for an endorsement." I go, "Okay, you got to direct them to the agent." So
Right.
you know, so
Yeah, no, that's a
but
good problem. Means you're kind of getting integrated, which is good, because as an agent, like I know myself and I know other agents, they want to bind the policy and move on, but give that
mhm,
client what they want on an easy setup, of the pay-as-you-go system, and then,
yep,
literally manage that on the back end like you do, and I'm out of
yeah,
it. I don't
yeah.
want to be involved in it.
And one key thing too that I'd like any agent that looks at that sees this podcast understands, my staff is pretty well trained to keep their eyes and ears open. If you're going to lose a policy to an ADP or paychecks or whatever, they'll disappear off the radar screen before you know it, because suddenly their payroll, whoever you had them with for payroll, they don't have them anymore. Also too, sometimes they'll make that that series of inquiries that we'll know going into their renewal that
Oh, bless you.
sorry about that. I was
No
been
problem.
fighting that one for about 30, 40 seconds here, but I knew it's coming. But when we hear about that, look, we don't want to lose the customer, but we also don't want to lose our agent, have our agent, not that it would be our fault, but we want the agent to keep the business. The over 10,000 current customers we have, and probably 25,000 that we've had over the course of the last 14 years. All of those have been brought on by other agents. We don't have a sales team that bring on out selling RPM. They're all, it's all brought to us by agents. So agents are our lifeline. So we want to
Perfect. And then
protect them.
kind of backing up big picture wise, just so we're on the same page, because sometimes it gets confused from on the agency side because there's so many different words about pay-go. This
Yeah,
program does not include any kind of payroll service.
right,
Now, of course, you're integrating with whatever payroll service the customer already has.
correct.
And you could refer a new service in, but the majority of the time it would be that, let's say I'm an agent, I've got an let's say QBE or Pi or whoever
Yeah,
that will offer a pay-as-you-go product, and I'm already appointed with them as an agent, and the client has interest in pay-as-you-go because you can lower down payments,
yep,
streamline that on an as-earned basis, eliminate surprise audits, all the advantages, and then once I bind the policy, there's a form that's completed
yep.
by the agent and client to set up the account that is sent to your team. And now what
Yep.
happens?
Well, then my team will reach out to the client, make sure that if the form's all filled out correctly. We just introduce ourselves so the client knows who we are, so they see uh, they might not even see their invoice. People get inundated with emails all the time now. So if they don't see their invoice, but to see on the bank statement that our reliable premium management took money out of their account, we want to know who that is.
Right.
But the one thing that you mentioned that's important to know is that agent might be out there and is maybe that account was referred to them by a payroll company. Well, I don't want to upset the payroll company. We're agnostic on the payroll. We don't care who the payroll company is. So, but on the other side of that is you might be out there as the agent and that client is with ADP and they don't really want to switch from ADP. They, because it's a little kind of be difficult mid-year and all that stuff. They don't want to switch a payroll company, but their insurance is up. Well, the ADP agency would love that account. Well, they're going to offer them pay as you go, and they're the only way that they'll do it is if they're the agent. You bring RPM in, and now the client can keep ADP. They can keep you as the agent, and we handle it. And I would say we have with ADP alone, we probably have nearly 4,000 accounts that are utilizing ADP. And a lot of that's Amazon. Amazon requires either ADP or Paycom to do their payroll. Well, but they want the agent wants them. Well, the only thing that's going to happen is us. So
Perfect. So then your team contacts, sets them up, figures out what payroll system they're on, how often they're paying. Then they will basically get net rates from the carrier. So
yeah,
that proper billing is set by class code, right?
yep,
Set
yep.
that up properly, and then ask the client what the best way for them to report. So you want to talk about that? Is it something because you have some automation there too, and some hand holding where you guys
Yeah.
all right?
Well, that's kind of what sets us apart from the competition. Competition does not really hold hands. They're very technical, which a lot of your bigger carriers, the high volume, they like that. They're like, oh, it's all automated. Email client has set up their account and all that stuff. We also know that a lot of people don't like to do that. So we have the automated. We also have the non-automated. We're not a server. We're servants. We've got, in RPM alone, there's over 40 employees that reach out and set that client up. So it'll be how do you want to pay? Do you want are you set up on weekly, bi-weekly? We have some clients say, want to process it weekly, but take it out monthly. Different things, different ways. Yeah, we are we are very, very flexible. And that's one of the
Right,
things
right,
I've
right. For
always,
those payroll companies, let's say like a Paycom or whoever that
yep,
allow integration, you'll do the plug-in and it'll just all happen within that, right? And you
yeah,
guys
yeah.
accept the premium payment and then push that to the carrier automatically, right?
Yeah, so it depends upon the carrier. We let the carrier make the determination. So most of the payroll companies, it depends upon the payroll company and the software. The client signs a form, grants us authorization to view their payroll. That way they're not saying, well, who's seeing my payroll? Uh, and then what we will do is we will pull that payroll, our system calculates it. And then it creates an invoice to the client a couple days in advance of pulling the premium. So they see what the premium is going to be. They see that they can, if there's a problem, they can contact us ahead of time. And then some carriers, a lot of carriers want us to hold the money and report once a month and send it once a month. That's the way they want to do it. Some want it more frequently, and some want us just to pass along, just their eyes on the payroll, and then we send it to the carrier, and the carrier pulls the premium from the client. So it just really varies by carrier. We don't have, this is the way we do it. It's just how to, we got the carrier, the agent, the client, and the payroll company. We got four things there. We got to figure out, what's the best match. So
Right, right. To your point, that's where that personal service comes in. I
yeah,
noticed like in the beginning, there was things like that smart pay system, which is awesome, but they don't really want to get into talking to the client. They just want to set the thing
it's
up with the
automated. Yeah,
carrier,
yeah,
make it automated, like you were saying, like a server. And
yeah.
there's a little bit of back end to it, but like it's not full force like your people, you know?
No, and we actually know the smart pay folks very well and get along well because they're the front end for several insurance companies. A lot of agents want us, or the clients still want us, the payroll company still wants us to input, and they're willing to pay a little extra for that because they want the eyes on the account, especially your bigger accounts, more complex. And so we have, I don't know, several hundred accounts that are actually we log in to SmartPay and use their system, and they've been to our office, we've been to theirs. They're so
That's how I found you, by the way.
yeah,
Dino from SmartPay
yeah,
referred me to you because he said,
yeah,
"Hey, you know, like your clients need a lot of hand holding. You know, let me introduce you to Jim. You know."
yeah, exactly, yeah. And that's and likewise, we've gotten some requests for proposal from some very large carriers, and we get in the middle of a conversation, we realize they're looking for software, they're looking for a technical side, and because we're agnostic, where we use whatever carrier presents to us, so we know the different softwares, that SurePay, SmartPay, there's a couple other ones out there, and we can make a recommendation. We generally tell them, look, if you want no hassles on the tech side, you'll work with SmartPay, you're gonna get it.
And I
We like,
noticed too, like I had one client that, does their payroll in-house with a no-name payroll type system,
yeah,
something that's part of their own, internal billing and such. And so they just wanted to do like the traditional reporting form, which,
yeah,
you guys allow, if you
yeah,
will, you
yeah,
take, from
yeah,
that. So you'll go down to that level where you can go do the reporting form all the
right,
way to integration with the payroll system and then everything in between, right?
yep, 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 yeah, just whatever the carriers allow. We've got, and a lot of them that are not listed on the site are those carriers that want, they want the form were submitted once a month on a certain way, and the payment in a certain way, and they're kind of the more of the more work, so we say, well, we'll do it, but let's not advertise that we do it, so if a good agent says, hey, do you work with so and so, whatever company? Yeah, we do.
Okay.
For you, we will. Yeah. So yeah,
Oh, great. All right. Yeah. So again, I think the main point is that what that agents can trust is that once they bind the account, fill the form out, you guys take it from there, and
yeah.
they don't have to be involved.
They
Otherwise,
don't have
if
to,
there's some kind
right?
of question or problem reaching the client, or the client's not cooperating,
That's
whatever, with
right.
the reporting, you guys will notify. But the agent can just go hands off, turn it over to your team, like versus the other scenario I was mentioning, which is not possible. We need some hand holding,
Yeah.
which agents love. So we can move on to the next account and not get into
Yeah.
that service of that
It,
piece,
it's yeah. So when we're the designated pay as you go for pie insurance, and pie will sometimes offer, the agent goes, oh yeah, I want to pay you. They check. They don't really read the paperwork. They don't tell the client anything about who we are. And so then we're calling the client. They think we're just cold calling with telemarketing. So then we have to go back to the agent and say, hey, we're trying to get your client set up on pay as you go, and they're not responding because they don't know who we are. So the agent, it's really the educating the agent. That's why a podcast like this is really good, because the agent, just all they got to do is a little bit of engagement, say this is reliable premium management. They're going to be contacting you. We're going to fill out this form. We're going to get you set up, and then it's fine, so
Right, because they've got to give you that blessing, the agent does, so they know the connectivity.
yeah.
Otherwise, they're not going to know, hey, what is this about? All they know is the pie name and the agent's name,
Yeah, yeah,
or they barely know the pie name,
yeah.
probably.
They hardly even know the pipe. Yeah, so a lot of people, who's your insurance agent or who's your insurance carrier? They go, it's Fred Jones. Well, Fred's not your carrier, But so yeah,
Yes. And then the other thing will be, I noticed too, while we're still on the reliable premium side of the conversation, and pay as you go, that you also can offer, if the client wants it and the agent wants it, some audit support. Can you
yeah,
kind of talk a little bit about that, of how that
yeah.
works?
So yeah, so nobody likes to have to work on audits. It's extra work for the agent. A lot of times, clients upset, whatever. We do audit review for free for all of our current clients. If they're a client, they get free audit review. If they're not a current client, we do it for very inexpensive for the agent, because we know that it's a good way to foster good relations. But what we found is, and I'd say this kind of as a joke, but if you drop out of accounting school, you become an insurance auditor. Um, the audit methods are very rigid, and auditors. I had an office in Florida, right across the garden. It was one of those garden offices, whatever. Was an auditing company, and we talk, and auditors come in on a Friday. They look like they've been up all night, because they're living their own personal lives, and they've got a crunch to get so many audits done that they're jamming them through on a Friday, and they're not very accurate. And so if you've got a policy that starts February 8th, they may be taking that whole quarter and then taking the quarter of the following, the first of the following quarter. They're just kind of jamming that payroll in, or they're missing entire states sometimes, or locations. And so our audit team, we started keeping score about 2 years ago, and currently this year alone, whether it's in favor of the carrier or in favor of the client, we're seeing audits there's over $3 million in discrepancies and mistakes made by the carrier. So we would tell every agent that would ever use our system, utilize our audit service. It doesn't cost any extra. We want the client, we get money back for the client more often than we do for the carrier, but we have had some where carriers miss an entire, and an agent, that's music to their ears. We did have a incident just where we had a carrier was going to give back like $100,000 in premium, and they contacted us. This is years ago, when before we really got integrated even more with the carriers, knowing we did this. And they said, "You guys are usually pretty accurate. How'd you get this far off?" So we looked and go, "Well, you missed an entire set of states here where they have locations." So you can imagine what that agent would have got this huge charge back, and then the carrier at some point in time would have figured out that they missed all these locations. Then it come back to the client looking for that money again. So, just being that buffer is really important. So we reach out to the agent, generally about 6 weeks ahead of time for of the audit. Let them know, here's our service. Utilizes, let us review these audits. Some carriers send them to us now automatically, which is pretty cool. They just send us audit before they send them out to the client. So
And then you'll check, tell me what you'll do. Like, you check payroll data that you have on file versus the
yeah,
classes, and like,
yep, yep. So we'll just check, our records, and what's been reported. But what we have in our system is exactly each week's payroll, and we calculated. So we've got an accurate 52 weeks of that policy period. And then we'll look and see what they've got. Well, they might have 5 quarters. They might have, they might go by by you know, a certain calendar date to a certain calendar date, or uh, they're going off of their system, which pulls a report, and again, like it misses locations, it misses certain things. And then sometimes people legitimately owe because they didn't have subcontractors, you know, certificates or whatever. And then we assist in the collection there because we can access that. We don't just go and take it, but we do let the client know, hey, we can pull this out. If the carrier sets up a payment plan, a lot of times carriers give that to us to collect, and we just submit it on a separate report once a month. Just really helps out with a lot, you know, from the carrier standpoint.
No, it makes
And the
sense.
agent.
And then what about, I guess you're going to have the straight time overtime, in the
Oh
right
yeah,
place. It's so that that doesn't get, or, gets
yeah.
added.
Oh yeah, absolutely. Yeah, I've said this and I brag about my staff. If you were to take all of the people in the insurance industry that know really how to audit, really how to do this, I think that at least, you know, 24 of them are going to be sitting right in Wake Park, Minnesota, in my offices because we really, that's all they've done. You know, that for, you know, and really, as part of my agency, several employees worked then. You know, so really going back over 20 years of experience, multi-state. They know the overtime rules, they know tip credits rules, they know the vacation paid, all that stuff, you know, and it can vary by state. Then some carriers will even misunderstand it, you know, multi-state carriers. So we've corrected the carriers too in those situations.
PNC agents, have you run into Byberg, which is a Berkshire Hathaway company quoting workers' comp for either your prospects or clients? Well, great news. Insurance Solutions, a national MGA, has an appointment that is set up to allow you to quote, bind, and service Byberg at your agency. And the coverage is in all states. It's A-rated. Startups are even accepted. There's 125,000 maximum premium. And some of the tough industries they write are construction, transportation, that includes towing and parcel delivery, manufacturing, security guards that are armed and unarmed, motor mediation, and many more. So go to our website at insurancesolutions.net, click the Get Appointed link. We'll get you logins for you and your team and can set up a webinar for training if you'd like. Also, feel free to email info@insurancesolutions.net and I can handle the submission myself, or call 770-402-5343. Be glad to speak to you and give you more detail. Thanks. Plus, it seems like what I've noticed on the carriers that we have that, don't offer, unfortunately, pay as you go in their billing model. So I can't, utilize a system to, to help them, but they get caught up in the audits, and then they're non-responsive to the 941 request or whatever's requested on time, and they start getting, the current policy gets canceled, of
Yeah,
course, and then they're coming after them for the money and, making
yeah,
up an estimate and amount. I mean, it's just terrible, a
yeah,
mess.
yeah, 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 and that definitely happens. And we tell the carriers repeatedly. I try to tell the agents too, because the agents are getting contact on this. That, you know, it's not that, you know, they just might not be seeing it, but we can provide that information. We can provide a complete audit package to the client or to the agent. Say, here's what you can give your insurance company. It's got all of our. So we're basically doing a pre-audit, so they don't have to go through that whole mess. They go, oh, here's my audit paperwork. The auditor doesn't even need to go out and see them, and whatever. It's right here. Boom. And we're trying to get more tuned to getting that out to agents. We have been, but we're really starting to push that now, marketing that, because that's a very important feature that we want our agents to really know, that this is a really good service that, that we have here, that really, it eliminates that headache. It saves time, preserves your account, everything's smooth. Heads up, you're getting money back. Heads up, you're going to owe money, whatever, so.
Oh, that's great. I mean, I didn't know it was, I knew you had the service. I just didn't know it was included. So that's great. And,
Yeah,
on pricing, it's very reasonable, your model of reporting fees. What is it, like 15 bucks or something like that for weekly,
it
or what?
it, it
You
kind of
remember?
varies by carrier, and by the process that's required to get the paperwork. Yeah, it's in that we're actually cheaper than as long as we're picking on ADP. ADP has their price for pay-as-you-go embedded in their service, and we're about 30% cheaper than they are, and we're a standalone service. But yeah, it varies from could be as little as $25 a month with some carriers, because we're not really doing a lot, we're just kind of passing along that information, up to 50, or in some cases maybe $20 per transaction. And then it'll vary how many bank accounts, how many Fed IDs they have, if they're multi-state or multi-location, then we'll get a little creative to help get the deal done. Because it's not set in stone. I mean, our fees are pretty well set in stone, except for we also understand when we're talking to agents, and hey, sometimes the agents want to pay the bill, they don't want the client to pay the bill. We're always willing to help, get things done. The bottom line is we don't get a percent. We don't get a percentage of the commission. We don't get a percentage of anything. It's strictly fees. So, we got to get paid too, but we also realize that these agents, in any silver bullet they can bring to the table is good. So
yeah, I mean, and you've got these carriers are charging like an installment fee, of $7 to $10.
yeah,
So then you're let's say $20 a week, so at you can't hire someone to do the work you guys do for that, to do the payment, and the receipt of payment, the integration of the payroll data. I mean, it's it's like a no-brainer, and the clients the ones I've talked to never balk at it whatsoever. Like, oh yeah, hey, this is great.
Yeah. The only times that we've ever had those issues was back in the days when I was still kind of migrating out of the retail, and I had a lot of paychecks and ADP reps that were sending business, and especially the younger ones that didn't understand the value, because they cycle through about every 2 or 3 years. They get to reps, and they just didn't, they're out there competing with each other, and every dollar counts. And so they had a hard time grappling with the value we provide. But it's so funny, when I was at an agency, a very well-known agency that handles a lot of workers' comp, and I was talking to them, this is about 8-9 years ago, and I said $15, and he goes, $50? He goes, well, that's not enough. I go, I didn't say 50, I said 15. Somebody looked like, he looked at me like I was panhandler on the street, but
No, and the big number is when, like, I just did a quote, I think it was yesterday, where they went through all the installment options, 15% down. This is a pretty big premium, like 300,000. So they want like 45 grand down. But if you choose pay as you go, which, RPM is the back office in this carrier, then it's zero down, just the taxes and surcharges, right? Like $2,000 versus 45 grand. That is the selling point, because it's in construction, transportation. They do not want to write a huge check for a deposit.
Right. Well, and if you think about it, interest rates are high. You take that 45,000, say there's 40,000 left over after they put that away. At 5% interest or whatever, they could get a CD. That pays our fees. Might as well save money in your account.
Right.
So yeah.
Just cat and cat. Then you add in the cash flow arrangement that you're providing for that client. Being billed as earned as their payroll fluctuates.
Right.
That's phenomenal too. So now moving on to, like, again, that I set the stage up early on, and we got into the pay-as-you-go billing on the top, but talk about the new pay-as-you-go general liability program, Jim, and talk through like who you're addressing with that. How does it work?
Yeah. So back when I was writing a lot of insurance, I always wanted to get a pay-as-you-go general liability. And I had one for a brief time in 2005 or 6 or whatever, but it was kind of hard to work with. And then the carrier got bought out, that went away. But so then years later, I was talking to somebody, man, I wish we had a pay-as-you-go GL, and I wasn't even writing business anymore. But next thing you know, I get a phone call, say, hey, you still serious about that pay-go GL? And I said, yeah, if we could offer it, I think it'd be kind of cool. And so it's kind of morphed into this program. So this program is it's designed for the contracting classes, contractors and artisans. Workers' comp codes, it covers about 72 currently. With GL codes, it's 48. So we matched the GL code to the comp codes. So, so a payroll company does not have to make adjustments to its reporting, which is nice because if we can get it, it translates over to the correct GL code. So it's the same scenario as with the workers' comp. They don't have to estimate either payroll or sales. And for contracting, that's really tough because what if they estimate a sales and they got a really big project, they put that down, well, they're going to be paying for it, you know. But what if that thing gets pushed back 11 months and now they start in the 11th month, they haven't gotten paid, they haven't anything, but they paid a big insurance premium. And sometimes carriers don't have to give that back. You know, or they conversely, they get a big contract and now they get the audit and they owe a big chunk of money. And this works exactly the same way. It's low down payment. If they pay weekly, which we know most do, they pay 50-second down, 1/52 of the policy premium. There's no finance charge. So, you know, in a situation where it'd be financing the premium at 20%, there's no finance charge. There's some administration fees that are built into it for us to handle it, and there's because it's issued as a risk purchasing group, not a risk retention group. I won't deal with one of those, but it's basically assigned to an association that I own. So they pay a very small association fee. Now they're part of the risk purchasing group, and so it's special pricing, special payment options, which is also why it's surplus lines. It is Markel based. It's a Scottsdale, a Markel company. Your standard endorsements, primary, non-contributory, blanket waiver, additional insured, all that stuff's included in it. So the agent doesn't have to come back and, you know, the premium's not, you know, if you're selling a bare bones policy, this one's going to be more. This is you're buying a Cadillac, not a Chevy. But it's pay as you go, and you don't have to go back and service it because all the endorsements that the typical contractor is going to need are already right there. And so it's very easy. What I would suggest that they do is, you know, they submit the GL app to you, and you know, you're familiar with our system. Put it in. You know, we've gone through that. Put it in. We'll get you the Pago GL quote. A lot of agents, you know, they'll struggle with, well, they want to get paid up front, you know, and I'm going to just put the address the elephant in the room. Hey, when I agency bill the client, it's a $10,000 premium. The guy puts $20,000 down. I get my $1,000 commission right up front. Well, that may be true, but if you don't offer something new, just like when I was offering, you know, workers' comp pay as you go in 1994, 95, you know, I had to wait for my payment, but my clients never left. And when you can be unique out there, you're trying to get something that's unique and new that's not been done before, go with that. I just, from somebody who's done very well in the industry, you are if you're worried about the money you're going to make today, you're not going to make that money tomorrow because someone else is going to come in with the product.
Right, especially if you've already, let's say, they've already bought into the pay-as-you-go work comp model, and the agent currently controls the comp, but they haven't had a chance to get the package quoted yet because there's another agent at the door. This is the way to come in. That other agent probably doesn't have the access to this, most likely, because it's so new.
Right. I mean, we're very finite with who we're, you know, like we discussed, we're not blitzing this out to agents. We want to control, we want to write good business. We want to write through known channels. And this is a good, it's a, you know, to me, if I had ever decided I want to put that retail agent hat back on and get out there, I'd be hitting up these trade associations and all that and say, look, we can, you know, especially look at the economy as it is right now. You know, everyone's like holding their breath waiting for the balloon to pop. Well, wouldn't it be nicer if you only paid what you owed? You know, you hear that all the time, you know, on the commercials now with like Geico and you know, only pay for what you need, which putting the decision factor into the hands of the insured, which is never a good idea.
Right.
But this is only paying what you owe. we've already been doing that with workers' comp, and it's been wildly successful. Paychex and ADP wouldn't be the companies they are if it wasn't pay-as-you-go workers' comp. That's how they go out and advertise their business. So why not be ahead of the game? You know, and it's super easy. Paperwork's easy. It's very few questions need to be asked. The way the carrier is, as we've discussed it, is look, there's no audit because they're getting an audit every pay period. You know, so they don't even bother with the audit. The only time they're going to audit.
Does this roll down to your RPM process that you do work for
Yep.
workers' comp as far as management of the payroll? How does
Yep.
that work?
Yeah. So it works the same way. So ideally, let's just say you have a work comp account, you add in the GL, it's, you know, boom, boom, it's done. You know, well, it is two separate processes, but we can also just do the GL too. It doesn't have to be the work comp, doesn't have to go through RPM, but it's just but that whole process is it mirrors the workers' comp.
Okay, so once down, similar process, a form's completed, I guess, already on your end, because you have the data now, because you're actually behind the, you know, the sponsor, if you will, this particular program for agents and clients, and then it then goes into your setup department as if it's like a new workers' comp account, but it's GL, and they get a whole client, get all the payroll coordination going, right?
Yep. Separate system, but it mirrors that. Yeah, it looks the same. Yeah.
Perfect.
Yeah. And yeah, it works very, very well. So.
And then as far as what like, is there a loss ratio or anything of that nature typically with the loss runs? I forgot to ask you that when I was looking at this.
No, just ask the questions. It's very it's really based on, you know, are they telling the truth or not? Yeah, but with GL you can do post claim underwriting as well. So I would just caution an agent, say, don't, you know, let's just be as honest as you can. You know, if they'll write startups, if the proprietor is you know, has a couple years experience. So when it asks a question about, you know, we're not looking for prior history of loss runs. We just want to know, is this a school teacher that's now going to go out and start cutting down trees, or, you know, what's their history? And if they've got some experience managing, you know, a workforce, or, you know, or managing, been in that industry for a while. The other thing that it's really not the market for is owner only. There's other products out there for that. And the problem with the owner only is it's 16/7, and it's a steady, and it's more work on our end than it is even on, you know, and the carrier's already said, because we did have some agents who were putting a lot of those in there. And carrier said, no more of that. You know, we don't want, you know, could you get it bound? You could, but you're not going to be, you know, on everybody's Christmas list. The other thing would be we can write general contractors, but again, they have to have some payroll. If there's no payroll, there's no premium. So
how do you deal with that if they stop start with payroll, you know, for reporting purposes? How do you deal with it?
Well, the system's set to do, it depends on how long they're going to be. If it's more than a month, it could be a cancel rewrite. If they notify us, we can run a minimum, and you know, so it's really just a matter of you know, are they shutting down and going to be back in 3-4 months? Well, then they're going to have to get a new policy, because that's one of the things that the pay as you go is, it's pay as you go. If you're not going, you're not paying. So,
right. Same with workers' comp, really, you know, it can be canceled. Yeah.
The other thing too is with any kind of general contractors can be written in. The code's there. But again, it's based on payroll. If they're a paper contractor, there's really not an advantage. The reason being, I mean, maybe with a little bit less down payment, but subcontract work is taken at a flat rate. We are working on adjusting that application if the payroll company is handling the 1099 people too, if they have the same subs, can they pay that as they owe? And the answer right now is not currently, but that's coming. So that would fluctuate too, but that would be another opportunity for the payroll company to get the subs. But that's the audit is, if they subcontract more than 20%, the carrier may request a midterm audit just to make sure that they're on track for the right amount. So if they say, oh, we subcontract 10,000 a year, and they really subcontract $1 million, the carrier's going to want to adjust that premium.
Makes
So,
sense. And is there like, would you say there's like a certain minimum or maximum premium size that's a good fit for this program, in your opinion?
well, I mean, of course, we want to see premium. We just quoted one that was $50,000, which I mean, yeah, that's a pretty good sized GL premium. That the down payment, all that stuff is calculated in the interest, and it'd be paid on finance charges. But really, while I say there's no minimum, really it's designed. If you got one employee, that's fine. One non-owner
So
employee.
just not owner, yeah.
Yeah, it's really more based on that. We'll take. We don't want to make a steady diet of that, but we'll take it. That's no problem. It's
So,
going to be an automatic system. So.
so are the premium finance fees are already included then, within the
So
program?
there's no finance fees, but the admin fee for RPM, and they have to, technically we have to charge for the association, otherwise it's not legal. So we charge a small association fee it's a RPG, risk purchasing group fee, and then commissions are in that for the program manager and so forth, the fees. So there's some fees built into it. The smaller premium is going to go, wow, the premium's $100. The fees to start it are whatever, $200. But the bigger premiums, it's very nil. And then it drops down after that initial payment. It's just getting the program kickstarted.
And is there any state you're not in with this?
Yeah, we are not in Alaska, Hawaii. We're not in Vermont or Kentucky. And we're really not wanting right now with the current policy form to write in New York. New York has a couple of things there that our exclusion list is not going to go over very well. So we're just not, better not to bring on an E&O or any kind of an issue or, for the agent. Something not being covered by issuing it. So we're working on that, but we want to get some premium volume in there. We want, before we start making demands, making asks. We are working with another carrier too that's going to come out with a program that's going to be admitted paper that would cover some of those states. The problem with admitted on a company the size of Markel, they got to go through and file all this. It's the RPG aspect of it that they have to do. That's why we went on admitted. Otherwise, we'd still be doing, the working with each state. But with the admitted, we don't have to necessarily do that. And it's a little easier to calculate and so forth. So there'll be an option. By the end of this year, there's going to be options of what the agent could select on that.
Okay,
So,
California is okay, right?
California's fine.
Excellent.
Yeah.
And then, I didn't mention it earlier, but like any agent that has a concern about the fact that they won't get their commission up front, there can be a program fee added onto
Yeah.
this as well. And that
Yeah.
could, if you almost covering the commission piece,
Yeah.
well, actually you'll get both. You'll get paid as you go monthly,
Right.
for commission, and you can get a program fee if you need to get some upfront cash because that's the way your
Right.
agency needs to run,
Absolutely. Yeah. And I wasn't going to bring that up unless you do, but yes, there's a policy fee that can be added in. There's a line you could say, okay, I'm writing this one man shop. I don't want to write this shop, but I need another $300 to do it. Or maybe you could put that in there.
Right. Or they can just
We'll
bill it
put it.
separately, which they typically do as an agency, on their own letterhead or invoice.
Yeah, I was friends with the program manager. I won't name names, but they sell a contractor GL program, and he said that basically 3/4 of their income is fees. It's not commissions. So,
Wow. Yes. And again, the contingency bonuses they receive too, obviously that's a bigger
yeah,
piece.
yeah, I'm sure. Yeah.
And then would you say there's any other restrictions that you can think of other than what you mentioned about, in some of the states like New York, anything other in some areas where the GL wouldn't be a fit with a certain endorsement or things like that, like big no, for your coverage?
No, just understand it's a one policy, so it's designed one size fits all. So it's 1 million, 2 million, a million of products, completed operations. Sometimes they need more. So it might not fit certain situations. And just give it time. It's a brand new, it's never been really done before. So, you can't expect it to be perfect right out of the gate, and you can't expect the carrier to give away too much right out of the gate either. And there's certain classes of business that you'd think would be easy that for whatever reason or not, or there's certain zip codes that are not competitive because the carrier feels as though there's maybe too much litigation in those areas. So, where they've had bad experience or whatever. So don't take the first quote you get and say, well, never mind this then, because it could be, that class in that zip code, there's an experience problem. So
Okay.
I would just submit all the GL to you, a little plug for you, but just submit it all
Right.
and get the quote. I mean, who knows? Why not? Why eliminate it? We're not going to make it do a separate process. They're going to give it to you, and you can quote it. And hey, it's an extra option. It could be the one thing that gets you don't know if that client's going through some financial issues or something that you offer them. Well, this one's $10,000 down, and this one's you know $1,200 down. Which one do you want? so,
That
so
makes sense.
yeah,
Um, and then, yeah, so I know I appreciate the plug. So yeah, and basically, you were kind enough to work because of our relationship, to work with Insurance Solutions to launch the program along, I think, with some other MGAs. But we appreciate it. And so
yeah,
any agents that want to give it a try, just send the general liability accord information over to me at info@insurancesolutions.net. And my phone number 770-402-5343. But if you just shoot a question and or the application over, then we'll get our team to enter that for you in the system and go through a few of these for the agent so they can get, like you said, kind of get used to seeing if this is going to be a fit for their clients or not,
yeah,
depending
yeah.
on where they're located and zip codes and things like that.
Right, right, right. It's worth a shot. It's always worth it to, if you don't offer it, someone else might be, and especially right now where you can be the new kid on the block with it. It's and let yourself stand apart. And having worked with payroll companies for the entire extent of my career, if you have something new and different and it can help the payroll company, if that's where you're getting your leads, Mr. Agent, talk to them because this gives them something new. And they actually, if a payroll company can actually make some money off of this as well, because we can integrate a nice payroll fee in there as well.
Oh yeah,
The
yeah, good
premiums
point.
are streamlined, and they're not, it's not, it's really built for everybody that's involved to including the client to take advantage of. So yeah. So it's but as an agent, I would I'd be all over it. Like I said, it's I'm too old, and I'd have to jumpstart anything, but and trash it because we're agnostic on all that. We want to help agents, but it's like I would sell this every day. I mean, every time, especially imagine as an agent, if you've got the DIY certificate feature in your agency management software, you sell a work comp policy. Okay, here's your certificate. Now there's nothing down here because we don't write it. But if you wanted pay as you go GL and auto and whatever, you can have all that on one certificate. It's one spot, because every contracting firm, that has their stuff, especially that are coming out of a payroll deal where you're only writing the comp. Well, you only got the comp. That means your comp suspect is subject to a broker record letter renewal too by the agent that writes the other stuff. So nip in the bud.
Yeah, wrap up the account. Oh, speaking of
Absolutely.
COIs and certificates, how does that work with your system? Do you issue? Is it okay for the agent to issue it?
It's okay for the agent to do it. Yeah. Yeah. They'll get any agent that submits an account will receive a contract as well. So give them, they submit their E&O to you and to us and so forth. So yeah. So they'll issue the certificate.
And then also, as far as you said, there's no audit. So how would that work on the audit, though? You'll handle the communication for that, or what happens?
Yeah, there's simply no audit because carriers feel that they're going to audit. They're going to ask for payroll information. Well, if they're getting the payroll information from us on a monthly basis, they've already got the audit information that they need. So the only time there would possibly be an audit is if there's a substantial, there's a classification where we know that they're subcontracting more than 20%. And then audit is still really at discretion of the carrier. And we're working on that in the program to build that in where for handling, if the payroll company is handling, if we're getting the 1099 information at the same time, that we would be able to fluctuate the subcontractor premiums. That's not done, but it would make sense that we do that, but that's also going to make the client pay all their subs through the payroll company. I'm just going to send a message here that I'm on another call. I've got staff that can handle this, but
yeah, no problem, no problem.
Oh, they want me to join them teams. I'll just send a quick message.
But yeah,
anyway,
we're wrapping up here too, so no problem at all.
This is more fun than the one I got to get on.
I know you like to, exit those meetings. I love, as quick as possible and get back to the fun stuff.
Yeah, this is more fun. So, but yeah, so again, the easiest way the simplest way to get started on the PayGo GL is to just submit the applications to you, and you submit them, and and it's easier if you can if you have questions, get with us, and then eventually you'd be able to answer those same questions come rolling at you.
Right, right, because it is so new. Our team's still getting abreast of all the different those that are coming in, and learning through it as we go. But it's so far gone really well. So I appreciate
one quick thing on this policy too. There's no deductible, which is we go through the policy, and we're a couple months into this, and we're selling an agent come back, or a payroll, somebody come back and ask, what's the deductible? We're like, well, wait a minute, we're reading, what is the deductible? So we asked the program manager, who, we're going through the MGA on this, and we go, what's the deductible? They go, we don't know. So they had to go to the insurance company, so nobody knew. It's one of the most obvious things you'd ask. Nobody knew. So it's that new. Right. I guess they're, I don't know. So it's kind of fun when you're at that stage in the development of something as old and boring as the insurance industry is, to say, oh, we got something new. So
yeah, it's so new, they're forgetting they had the deductibles in. I love it.
Yeah. Let's see how long they do that. But anyway.
One other question, the last thing I had would be on that 1099. So how is that treated in this scenario with the W-2 and the 1099 as far as the coverage?
It doesn't affect the coverage, but on the 1099, whatever they put in for subcontractors, that expense, that's what's going to carry over as a constant on a week to week basis. Okay. So if they put in, if the subcontractor cost results in a $1,200 a year premium, it's going to be $100 a month. Well, break it down by weekly, but that's going to be a set fee. So that won't fluctuate. And that's, if the agent's doing their job and say, what has it been? What do you expect, etc. We're not going to split hairs. The premium's not that much.
Yes.
To split. But if they're a paper GC or they're a GC that subs out a lot, then we would suggest that they update us. If they buy into this program for whatever reason, I don't see a lot of benefit for GC in this program. But hey, they might, but if they, it's just going to be generally your smaller GCs, or you got a contract that's got his GC license that might, he's a framer, but he's got his GC license. It's a good fit for them. We just got a little bit more communication, probably. It's still going to help the cash flow. It's still going to help everything else.
Yeah, so that's more of an estimated billing, but it's still billed per pay period. And as long as you get totally out of hand, you're not going to split hair. if there's a huge
Right.
increase in subs, they need to notify.
Yeah, because we may send out a notice that, hey, update your subcontractor expenses for the quarter, for the 6 months or whatever. That way it keeps them from getting a big audit. We're there, we're not there to police them, we're there to help them, before the police get there. So
No, no, believe me, clients need that as, as much as possible. As much hand holding as you can give in advance, the better, coming from communication.
right.
Um,
Yeah.
but well, Jim, hey, I really appreciate the time. I
Yeah.
think you got some exciting things going on. You got the pay-as-you-go work comp, you got pay-as-you-go GL. Hopefully you'll add some other new pay-as-you-go products I bet you're already working on.
We are. Yeah. Yeah. So we're working on EPLI and some other stuff that we're going to work to, things that make sense that can be kind of payroll based. So
Yes,
yeah. Yeah.
that's
So
incredible.
keep trying. We're gonna keep slinging stuff. So, and we appreciate you inviting me on here. It's fun.
No, I love the
Uh,
partnership and thank you for what you do for
yeah,
what you're doing for the industry and again raising that awareness of this pay-as-you-go model to help lower down payments for clients, particularly, which they love and forget that, stop the surprise audit mess because that's
yeah,
just blowback on me, blowback on the agents. Everyone
yeah.
hates that.
It,
So
it
we
really
appreciate
is. Yeah,
what you
and
guys are doing.
nobody loves talking. When you get that client level, nobody loves talking about insurance, and so you make it as painless as possible. You
Now
know,
you've got to focus on the experience and by eliminating some of these landmines of audits and big down payments and things, and then you guys jumping in to do all the hand holding that you
yeah,
do. This in the middle because as agents we hate that minutia once we make the bind or get the bind order. So you guys are doing everything the right way in terms of
right.
helping the industry. So we appreciate it.
Well, I think it benefits that I was an agency principal, and and I was with an agency for a while, but I was also, spent 15 years as an agency principal, so I kind of know what I would want as I spun these services off on their own. It's like, this would be how I would use it. So
No,
yeah,
you guys are easy to work with. We appreciate it. So, well,
appreciate that.
appreciate it. Have a good one,
All right,
and we'll talk to you soon.
all
And
right.
again, thanks again for tuning in to Insurance Shop Talk. If you enjoyed our deep dive into the latest trends, please don't forget to like, subscribe, and hit the notification bell so you never miss an episode. Until next time, I'm Eric Stein, and this has been Insurance Shop Talk.